We've been through a bit of a look at the Kenyan market's performance on Friday, and looking at the week that was, we saw marginal moves in either direction all through the week. What's your outlook for the week ahead?
Well, we got a slew of earnings results coming, the banking results for the half year, and then a bunch of other results as well. And I think the tone will be set by those earnings releases. I think for the most part that they'll meet market expectations, especially the banking sector, which had a strong, robust first quarter, and I expect follow through on that. So I think the market will push on with that, but bear in mind the referendum is now just a few weeks away, and that might taper some enthusiasm on the bull side.
Well, let's take a closer look at some of the players within the banking space particularly. I mean, we've had Cooperative Bank. It's rallied close enough to 50% post its full year earnings results earlier this year. And then we've had CFC Stanbic rallying 95% since it released its full year numbers as well. Just how much room do these stocks have to run, and how sustainable do you see these gains that have already been made being moving forward?
That interesting question. If I can just take Co-op Bank, the MD made some very aggressive noises about his full year results this year, and I think the market has responded to those to those comments. I think at this sort of level, it's on a forward PE probably of about 14 or 13. I think that's fair enough. With respect to the other banking stocks, I think they are actually fair value. The interesting counter this week will be KCB, where the rights issue trade for the last day today, and then you've got investors having to pony up at a price of 17 shillings. That's dislocated from its peers. The PE is very cheap even after the dilution, and I think you're going to see investors look to snap up a large slice of this bank potentially, especially because the government has diluted itself.
Well, if we are looking at PEs, let's take a look at Barclays Bank of Kenya. I mean, we saw, as I mentioned earlier on in the show, its share price hit a one-year high at the end of last week. Its price earnings ratio sits at 14.3%, and it's being considered as one of the best value amongst its peers, like Equity Bank, which sits at a PE of 20, and then Cooperative Bank sitting at 17.6 as well. What's your view on Barclays right now?
I think it was met with some very strong buying after its first quarter results, which were out of sync with everybody else. They were actually down 10%, but the story was that this was a one-off charge. I think it's good value. It remains a serious player in the banking landscape, and it has lots of synergies which you can put to work this year. It looks good value to me. But if you're a value investor, I think you're going to be looking at KCB, which even after dilution is on a PE of about 11.5.
Well, certainly KCB and Equity Bank really stand out at the moment amongst the firm favourites, and easy to see why, with both their aggressive expansion strategies now fully in play. What does that spell for a player like Standard Chartered? Let's look at that, because it has outperformed in terms of results, but it's certainly adopted more of a conservative approach than we've seen the likes of KCB and Equity do.
Absolutely. I don't think Standard Chartered is a retail bank in the same way as Equity and KCB are. I think Standard Chartered picks its retail segments very carefully, and its core business is actually institutional broking and institutional business. And I think here they remain very sharp. They've got a global network which they put to good work. And I think the last 18 months, where the results have been very muscular, confirm that the model is different and actually has a lot of value. At 234, you're looking at a trailing PE of 14, and you're looking at above 30% increase this year on profits. It remains a cheap, good value, high dividend paying stock.
Well, despite the improved economic conditions and the lower central bank interest rates as well, we had seen many of the banks still pretty reluctant to increase lending. What's the status in that regard, Aly Khan?
But T-bill rates are at 1.8%. I reckon the average lending rate in the country is 14.8%. That's 1,300 basis points. It's an elastic band that's simply got to snap. The fact that no one has got ahead of the curve is by the by, really. But I think the banks have held on way too long, and really they've got to adjust their lending rates, and it's a question of who has the capital to do that. This KCB rights issue might be KCB's way of going about taking advantage of that enormous widespread.
Well, we always say that banks' performance highly correlated to GDP growth in the country. With that, let's take a look at a tourism player. I mean, of course, the tourism sector is a big contributor to GDP. Kenya Airways. I mean, we've seen this counter over the last couple of sessions make some positive headway. But to bear in mind is that we have seen a 20% correction pullback post its full year results. So what's your outlook for Kenya Airways?
I think the price had got a little bit ahead of itself. The market expectations around the full year results were higher than what came through. And I think that's why we had this correction. But as you correctly noted, I think buyers are beginning to push back at this 46, 47 mark, which is a trailing P of 11. The core business is rock solid. African networks have a very high value. You know, if you fly anywhere in Africa, you're paying probably 50% more than it would cost you to fly elsewhere in Europe, for example. So I like the business. I think, you know, the investors were a little bit disappointed. They expected a much more aggressive turnaround at the full year mark. They didn't get that. But I think underlying the business, you've got a good value proposition at this sort of price of 46.
To what extent, Aly Khan, can this, you know, the kind of movement we've seen in Kenya Airways share price be reflective of just how dangerous over expectation with regards to results can be in the Kenyan market?
A good point. I mean, it's, you know, emerging markets, and then you're at the frontier, so volatility is a magnitude of what it is elsewhere. And you get, you know, 20% really is not a very big move in our markets. I've seen much bigger. So you're absolutely right. There's much more beta around the results in places like Kenya.
Well, on that note, Aly Khan, let's leave it there. Thanks so much for your time this morning. That, of course, Aly Khan Satchu of Rich Management joining us live from our studios in Nairobi, Kenya. And that